entry. Alright, so thank you for your time, everybody. I will catch you tonight in the live rooms, some of you who have just jumped in. Yeah, look, what I'm doing at the moment is I'm just testing the Euro US dollar and the Pound US dollar. So they're the two markets I'm concentrating on because they're the ones with the better volume on the CME. So they've got the most volume as far as or an activity on the forex markets. So they're definitely the drivers. So they would be the ones we definitely concentrate on. But it's a great combination to your strategy. You know, if you are looking to, if you're looking to diversify your portfolio, if you're trading crude, well, what a great way to mix it up. You know, you've got something that's going to give you fantastic reward to risk. You know, it's just using all the principles that we know are good trading principles. Let your profits run. Add to winning positions. So, you know, what we don't want to do is we don't want to, dollar cost average down as we're losing in a trade. That's never going to make you money. But you want to add to positions that are actually winning and going your way. So once the trade does come to the end, which it could do here, see, we've added here. As soon as you get this support, you add a position here. We've already short on this at 140. This is the beauty about the forex market. You split the account. You can be short one unit here or one lot here at 144.77. You're not going to lose the farm on it because it's, you know, you can trade 1 or 10 cent lots. So you can really get this really perfected at a very, very small risk, and then use your money management knowledge to build your account up and start playing it with, with a bigger lot size. So it's all about fine tuning and then kind of going from there. But look, I'm pretty excited about it because it's got to the stage now where the currencies and futures are running really well together, and they're giving us some kind of insightful look. And here's another sell opportunity. So you've added a long, and you've added a sell there. Now, this concept isn't like mean reversion where, you're buying when the market's selling when the market's going against you. You're actually selling on resistance points. So you're selling where potentially there's going to be it's looking like there's going to be a bit of a turn in the market, and we're not just selling and holding, waiting for it to come back to the middle. We're selling with a limited stop, and we're buying with the trend. So the concept is pretty sound. I'm looking forward to doing some fairly solid testing. So I'll get back to you on that. I'll let you know how it all goes. But yeah, if anybody wants to jump in and do some work on that as well, feel free to let me know, and I'm happy to split the market. I'm testing the Euro US dollar at the moment. So if anybody wants to jump in and do the Pound US, it's pretty exciting. As I said, there's plenty of opportunity and just lots of trading that occurs like this, where you can just add positions in and run with the trend. So guys, thank you for your time. Thank you everybody for joining us. For those of you who are new, if you would like more information about GMT, just feel free to send me an email, shane@globalmarkettrader.com, and there'll be a follow-up email after this anyway, just to let you know more about us. But yeah, very exciting. It's a great concept, and it's working well on the crude market and now working well on the currencies. So and you can see here in real time that, I'm not live trading this at the moment, but I definitely will be taking this for a bit of a run this week, and just making sure that I can get trades on. The beauty about it is that you're trading a market where you're not going to have any problem. As long as you don't get exposed to slippage, you're pretty right as far as fills. But you can see here that even this short, so let's have a look at where this trade's at. That was a sell setup there. So if we open this up a bit, there's your first sell setup on the trade, because that set a little resistance point there. So that was a sell. There's your second sell. Now that hasn't stopped out. Remember, it's got to take out the high. Hasn't done that. It's just faded the high. So there's your so we've got two shorts and a long. Now what happens is once support gets taken out on the, so you'd be working say a 2 points below that or 3 points below that as a stop. Once that stop gets taken out, you're basically done on your longs. So you've got to have a point at which you're out on the trade, and I'm looking between 3 and 5 points on the trailing stop below support. That seems to work a bit better than the TP. The TP isn't too bad, but it gets knocked out a bit. So I'm using the support level on that one. And there you go, you're out. So you're out now, and you've got 1, 2 short, you're 2 short, and you would actually be out of this trade now unless you hold one contract. So for me, anytime we break support on the 202, I'm done on all of my contracts except for the original. And if we go back to the original, then I'm going to keep my original trade running based on the most recent swing low on the higher time frame. So at least you're long, you've got something long if this thing continues to run, and you can intraday trade the shorts or add more positions or whatever it is that you want to do. But now it's time to tighten your stop up here, and we have a potential another potential trade setting up. We need to see a double bottom, a higher low here before we can add a position here. But that's the way I'm thinking that we would be adding or keeping ourselves in the trade. So whatever you've added, you want to take profit on. So if you've added contracts as you've gone up, they've all been taken out on a break of support on the 202, and all you are is basically long, and you're reverting back to the bank chart, which is the 1 hour and the 4 hour, and you're long on those on the recent swing low or high, depending if you're long or short. So if we go back to the tightest stop there is 143.06. So 143.01, and if we go back there, that's back down about, so that's a mile away, but it keeps you, so 143, it keeps you in the trade. And don't forget, whatever that is a mile away, whatever goes against us, we're actually short on that side anyway. So it's about it's basically getting close to being a bit of a hedging strategy. So guys, that any questions on that? Any questions? I mean, you don't have to use the stay in the long on the bank trade, but some of those trades run for 300, 400, 500 pips. So it's often good to be just working and staying in those type of setups. So that's it for me. Thank you for your time, everyone. And as I said, any questions before we go, I'm happy to answer them. It's